Okay, so I did promise you that we were going to look at a journal entry and how you do that in the system. Now I'm going to go ahead and I'm going to create that check for our computers that we just bought. So we're going to go ahead and we're going to create this check out here. And we're going to go ahead and pay for our computers. Now we've got Computers by Jenny, and that's who we actually bought this from. And we're going to choose our account. So we're going to go ahead and choose our computer equipment, but we're going to choose that original cost. Now remember I said that it was $20,000. We're going to have nice round numbers right now. Now I'm going to save this and I'm going to close it. Now QuickBooks does a lot for you, but there are certain things that it does not do in the system, and one of those is depreciating this equipment. Now if you feel comfortable with your accountant doing this, then that's fine. Just make sure that they actually do book this to your QuickBooks. Because what we want to do is we want to expense this out over a period of time. So whether it's 3 years or 5 years, we're going to expense it over that period of time. Now in order to expense it out, and I really like going in and creating a journal entry that will expense it out over each month, because that's really what happens, right? So we're actually going to expense this computer equipment over 60 months. So I'm going to come into my Global Create, choose my journal entry, and then we are going to move this cost down to our expense. Now I'm going to go ahead first of all and make this reoccurring. So we're going to say that this is computer depreciation, and we're going to schedule this. We're going to say just create it right away and do it every month at the first of the month. And I want you, QuickBooks, to start this out on the 1st of July. Now we have options. We can do it by a certain date for an end date or after so many occurrences. And in this case, it's better to do it for so many occurrences. So it's 60, and we're going to depreciate this over 5 years. We're going to go ahead and choose our computer equipment, but we're going to choose the depreciation account. Now we're going to lower the value of this, and we are going to go ahead and decrease this $20,000, and we're just going to do a simple depreciation by $333.33 every month. Now, QuickBooks requires you, and any accounting system does need a debit and credit. The nice thing about QuickBooks is it won't let you go on without balancing this. And so I'm going to come in now, and I'm going to go ahead and choose depreciation from my other expenses. I'm going to go ahead and put in that $333. Now what's going to happen is it's going to expense this every month, and it's going to be a nice spread. Now I save this template, and our depreciation is all set to run. That's one area that you may need to use journal entries. You can see where those journal entries are and how to use those.